India may have handed over presidency of the G20 to Brazil, but there's a lot of work associated with G20 that India is still a key part of. We've got a very special guest with us. NK Singh is president of the Institute of Economic Growth and co-chair of the G20 group of reforms on multilateral development banks. He's been working very, very hard throughout the year. Of course, he never stops to work, but that's another story. But the report which he's presenting over here in Marrakesh, and that's where we are at the IMF and World Bank Annual Summit, is absolutely critical because it's called Strengthening Multilateral Development Banks. It is very much a focus over here in Marrakesh, but it is a key focus of India's G20 process as well. Part 2 of the report, which is what you've just released over here, and you start by saying, and I quote, "The world is on fire, literally and figuratively. Why?"
Well, because of several reasons, Vishnu. Most important being that we are at an inflection point of multiplicity of challenges. One, the increase in poverty numbers in large parts of the world, far from poverty being eliminated, poverty going up, sub-Saharan Africa, many parts of the developing world. Add to that the fact that the requirements of resources from International Bank of Reconstruction and Development is enormous, looking at the challenges of climate, global warming, pandemic, other kinds of uncertainties. And therefore, in many ways, this is an inflection point for us to wake up and see the revised, structured, vastly reformed multilateral development banks.
It's interesting, and we'll talk, of course, at length about multilateral development banks, but we are in Morocco in Africa. This is the country that suffered greatly as a result of a recent tragedy. It's tragedies like this, earthquakes and so many other things that multinational development bank reform can help address.
Well, certainly, by all means. That is why I'm reiterating in my volume 2 what we have given in volume 1. Apart from enhancing significantly the resources of the IBRD, which is a normal lending process, which includes, we are introducing a new financing mechanism, which we call the Global Challenges Fund. This is specially designed to address the needs of pandemic, fragility, and most importantly, looking at Africa, the needs of an orderly transition to an era of renewable energy, which is needed really sooner than later.
One of the biggest problems as far as multinational development banks are concerned is that while the will has always been there, the sense that something needs to be done has always been there, the amount that multilateral development banks have in terms of loans has always been inadequate, which is why in part 1 of your report you had said you'd call for a tripling of annual sustainable lending levels to $390 billion by 2030.
That's correct.
Question number 1, is that achievable? And question number 2, if it is achievable, what will it achieve?
Well, very frankly, it is achievable because we have given the financial breakup of how do you get to this. So to give you a little ballpark figure, roughly speaking, Vishnu, currently, let's say in 2019, all multilateral development banks, and there are quite a few, by reckoning there are 17 at the moment, many of whom you may not have heard of, but there are 17 of them at least, if not more. Of course, we know the better ones. So if you take the 2019 figure, all of them taken together, they lent $120 billion in that year. We want that to go up to closer to $300 billion. And we add to that the tripling of what I call the concessional finance, 30 billion of IDA to be taken to 90 billion, the two aggregating to around therefore close to the 400 billion mark. How do you intend to do that for your second part? We intend to do it in 3 ways. First, in significantly enhancing the reach and optimizing the balance sheet. What do I mean by that? What I mean by that is, for instance, the banks must give up their status quo attitude, must begin to harness capital more aggressively, not lend on their own account, but for instance being able to use creatively guarantees, hybrid capitals, multiple ways in which they can lower the equity loan ratio, which then releases significant resources to the MDB as a whole. And finally, the last point there being permitting and facilitating the multilateral development banks to act as a family, not in silos, acting together. The outcome is much bigger than the sum of the parts.
It's interesting that, you've been speaking to so many people, we have as well. This has been a report which has been very widely recognized, accepted, and there's a genuine sense, certainly at the World Bank level, of people saying, this is fairly transformative, some of the suggestions. Would you tell us about the reactions so far?
Well, the reactions it has really been very gratifying.
Yeah.
For instance, in the meeting of the G24 ministers, day before yesterday, which I had the privilege to also speak to, ministers after ministers lauded and applauded the recommendations in the part 2 of the report, which is more granular in terms of how to harness private capital, how to mitigate the risks of private capital. Right now, regrettably, whereas the World Bank has a spectacular record that on the capitalization of just 20 billion, they have been able to successfully lend 900 billion, its record on lending to private sector is, alas, disappointing. $1 leading to only 0.6 cents of private capital. You want to change all this. You want to change all this by ways in which you can entice and catalyze private capital flows.
Sure. Now, you've called for multinational development banks to be, and I quote, better, bolder, and bigger. And you've explained each category. So let's look at better. You've answered to a large extent. Bolder, what do you mean?
Bolder, I mean, Vishnu, remember the World Bank from its old days. Risk aversion is the name of the game. Why? Because they are hung up on this business of not tampering by a long margin the AAA status and the preferred creditor status of the World Bank. So while retaining that, the psychology of risk aversion must give place to more informed risk-taking. And that's what I mean by bolder. Bolder in terms of the capacity to take informed decisions in which you can enhance your risks in terms of the equity loan ratio, in terms of harnessing callable capital, in terms of harnessing guarantees, in terms of harnessing hybrid capital and blended finance in a more imaginative and creative way.
One of the key concerns which have been raised over here in Marrakesh is the financing of climate technology, I should say, to deal with climate concerns and extreme weather events. What role do multinational development banks have with this in mind in the years ahead?
So let me put it this way to you. Climate has become a focus of most multilateral development banks. Even in the last few years, the extent of financing for climate and climate-related issues has significantly grown up. Is that enough? Not enough. Why? Because all expert reports point out that from now till 2030, the world needs to invest $3 trillion per annum, out of which, assuming if $2 trillion come from domestic resource mobilization, $1 trillion must come from additional concessional and non-concessional lending. Out of that, if you break up the 500 billion coming from private capital of the various kinds, that leaves out the 500 billion for the concessional and non-concessional finance. The idea is to use these resources of at least 1 trillion to be able to bridge that gap to moving toward 3 trillion, which is expected to be necessary for an orderly transition, orderly social and economic transition to an era of renewable fuels.
One of the key points that you've come up with is that there needs to be a change in thinking on the basis of which loans are allotted, a shift from individual projects to a strong role for national governments. Now, to me, that could potentially be problematic because in as much as it is important in terms of empowerment, what about oversight?
Well, we have been careful in that. We do not want that large sums of money become available without necessary supervisory and due diligence. We have not lowered those standards, but what we have said that do not really make that an end game in itself, but to able to ensure that the standards of accounting, the procedures are in no way compromise the finances which are there. But of course that does not mean that if you increase risks, you will end up in having the same degree of 100% perfection. But the framework which we have given, which enables them to take this informed decision making So a multiplicity of efforts. Let me give an example. Our recommendation to make the global emerging market database anonymized, public by 2024, will have for the private sector a huge amount of data available for enabling them to then take informed decisions on the need to put private capital and why it's a win for all stakeholders.
Yeah. Engagement with the private sector, also a very important part. How would you do that?
Engagement with the private sector in three ways. First and foremost, change the mindset of the bank. Get away from our own account lending to seeking targets which are demonstrable, which are quantifiable. We have recommended 240 billion that the bank must get over a period of time from private capital. This is the quantum change. You need to recalibrate your targets. You need to recalibrate attitudes. You need to recalibrate performance incentives. You need to retrain your human resource development and your human resource talent, getting away from the kind of old business to this new.
I'm just going back to my earlier question. I'm just trying to draw a link. You are talking about the reform of multilateral development banks. Multinational development banks. What I am also interested in looking at is the African Union being included at this juncture. That's something that India has pushed as far as G20 is concerned. Does that mean that African countries gaining loans through MDBs might actually be easier?
Oh, that is our intention. Certainly Africa is a very important component in this process. Tripling IDA from 30 billion to 90 billion. We certainly had the low-income countries and countries of sub-Saharan Africa very much. Tripling really the IBRD designed to be a blend of low-income and middle-income countries. Africa is very much an important recipient of that. And beyond that, the new mechanism which we have suggested, we have certainly the problems of African and African countries in mind in suggesting this new innovative mechanism.
One final question. We've spoken so much in India about digitalization. And at one level, it sounds, it works for us. We've got a digital back end, which is a technology back end. And we've also got the experience associated with using this, the good, bad, and ugly, all of it. How does this translate into something which helps development, let's say in the African Union, or is it just a talk shop?
No, I don't think it's a talk shop, because I really think that harnessing the digital revolution and the digital possibilities is for Africa anyway less meaningful than it is for a country like India in terms of the agricultural practices, in terms of being able to harness non-fossil fuel more imaginatively, in terms of their economic activity, their manufacturing systems. Africa has a huge opportunity where the bulk of the investment has yet to be made. And they have a choice of technology in moving into areas where digital technology offers them health, education, use of agriculture, use of their precious minerals, a huge opportunity to optimize gains. I think Africa has a lot to gain from the digital revolution, which is sweeping the world. And because it had a bit of a late comer in the typology of development, in the development cycle, Africa has a huge multiplier.
Sure. Wonderful speaking to you as always. A genuine sense of excitement over here in Marrakesh with regard to the new report prepared by Larry Summers and NK Singh over here. But it really does need to translate, and he's the first person who will say this, it needs to translate into change on the ground, something which can impact the lives of billions around the world.